On Lupin, under our Inside Edge segment, we did speak to the management. A couple of key important takeaways from the company, where the stock has, remember, rallied around 90% in the past 1 year. I'll start with the US markets, US pricing pressure. They have indicated that Q-on-Q, the price erosion was only around 1% in the US, and they're hoping for it to sustain. Pricing has been fairly stable in the US. Price erosion, in fact, has come down to low single digits, and it has reduced from what it was a few years ago. US elections don't expect an impact on Indian pharma companies due to the US elections. There is always rhetoric when US elections take place, and that basically is where the fear stems from. But Mr. Swaminathan of Lupin did assuage those concerns. Latest acquisition, remember, they made a 91 crore acquisition of a couple of Sanofi's portfolio of drugs. It will be aiding European markets, and they did say that the main reason for the acquisition was that it was also available at a good price. US markets, again, they expect to hit around $200 million of quarterly sales in the US. They expect it to sustain. They expect sales of around $300 million only from their respiratory portfolio going forward. Over the next few years, they expect to cross that $1 billion sales mark when it comes to the US. And next 3 to 4 years, they could see the quarterly sales in the US probably rise to around $250 million. It's around $210 million odd at this point in time. They will be focusing on GLP-1 drugs, which is basically the weight loss drugs such as Ozempic, Wegovy, which is turning out to be a big potential for Indian pharma companies in the next couple of years. And the estimate that margins would probably be in 22 to 23% on an immediate basis. We did speak to the management. Listen in to what they have to say.
There has actually been a period of low price erosion, so to speak. Quarter on quarter, we saw, in fact, just about 1% price erosion. So hopefully this would stay for some time to come. If we look at, in fact, year on year, it's actually in the high, I would say low single digits, so to speak. It is certainly not in the same levels as possibly last couple of years, so to speak. It's come down dramatically. And of course, it doesn't necessarily mean that it could remain the same way, because the number of players in the American market is still pretty high. We have been promising, in fact, successive quarters, margins would actually rise. I think we are well on course for that, because of the kind of products that we're launching in the American market, and of course the focus on looking at cost reduction. There's of course, in fact, the sales force that we added to in the last quarter of the previous year. We expect that also to kind of increase in productivity and contribute going forward. So I would expect pretty good, sales in India, sales in America, and for sure, products in Europe like Foster, of course, which is doing fairly well. If you look at, in fact, the competition, it's well about 22-23%. So I would like to target about 22% as core, and if there are good products coming up, it would lead to a spike by about 4 to 5 percentage points. So 22-23 is going to be our immediate target.
All right, let's step into a quick break. On the other side of the break, Ashish Kyal of Wave Strategy Advisors will be joining in with some market strategies. Stay tuned.